Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be the Wednesday, 9th of October 2024. So as usual, before we start the gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. As well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So as usual, before we jump straight into we call it the gist of the short-term intraday technical outlook that I share with you across the major cross-asset classes, let's have a kind of a overview of what has taken shape yesterday first in terms of news flow, data releases, and as well as their influence or their impact on the intraday performance of the broad-based cross-asset classes. So let's start with yesterday's US session economic data calendar. So yesterday was a rather quiet economic calendar, except we see a slew of US Federal Reserve officials speaking. So I don't want to touch on the very individual of them because there's actually 3 or 4 officials speaking yesterday. But in a nutshell, whatever message they actually portray is still the same rhetoric, pretty much data dependent. Risk right now is for the US economy to actually potentially slip into a kind of a softer state of the growth, and they're also pretty much concerned about the labor market, despite the fact that we start to see a one-off spike in the non-farm payroll data. So that actually also causes the US 10-year Treasury yield and the 2-year to actually slow down their rally in the last 3 days. Okay, so what do I mean by that? So if you look at the chart of both the 10-year and the 2-year Treasury yield, okay, so let's start with the 10-year first. All right, so this is the 10-year Treasury yield. So on the 10-year Treasury yield, what you see over here is that the price spike up in the last 3 days after that very strong rosy non-farm payroll data, and as well as the push up in oil prices in a very short spate of time due to the rising geopolitical risk premium triggered by this ongoing hostility in the Middle East region. And after the slew of US Federal Reserve speaking yesterday, we see the push up on the US 10-year Treasury yield. So this is a 10-year Treasury yield daily chart, starts to actually pause right at a resistance zone of 4.08 and 4.15%, which is the 200-day moving average over here. And it actually formed a shooting star as well. Okay, a bearish shooting star. So indicating that there could be some kind of pullback taking shape in the very short term, all right, in the short term perspective. And very similarly on the 2-year as well, the 2-year Treasury yield, which is pretty much a proxy for US Federal Reserve monetary policy over here. So it kind of formed there was a gap up. Okay, this is the 2-year Treasury yield daily chart, and yesterday it formed a kind of a bearish reaction candlestick yesterday, right below the 4.12% level, and now inching back below the psychological 4% level. So indicating that after the slew of US Federal Reserve officials speaking, the Fed is actually still in the mode of enacting its interest rate cut cycle. It's only now very dependent on the upcoming data, whether do they still want to push for a mega cut next of 50 basis point, but currently market is also looking at only a 25 basis point cut in November and December based on the based on the CME Fed Watch 2. And because of this, that actually led the dollar strength that was also seen in the last 3 days, or last 3 sessions, I would say, since Friday, to actually subside as well. How do I know that? By looking at the 5-day rolling performance over here. So we see, later I'll touch on the outlier, which is the Kiwi dollar, but the rest of the dollar pair against the other major currency, like dollar sterling, dollar yen, dollar cat, dollar Swiss, dollar Sing, dollar euro, and dollar Chinese yuan. Previously, this was Friday, the push up after non-farm payroll data. Then thereafter, it starts to actually plateau off. Right. So yesterday's bearish candlestick that has reacted off the 10-year and the 2-year treasury yield resistance level, respective resistance level, has started to suck out or dissipate the last 3 sessions of US dollar strength, except that we see an outlier today on the dollar Kiwi. So dollar Kiwi, the dollar remains strong against the Kiwi because for today, the New Zealand Central Bank actually enacted that jumbo 50 basis point cut and issue a rather dovish monetary policy statement. I'll share with you here. Okay, so New Zealand RBNZ step up pace of cuts as economic weakens, and it will say that further reduction will depend on economic developments. But however, they actually the the economic data in New Zealand is also rather stuck as well. So market now actually view that they may be much more dovish going forward. So that actually explain to us this potential this ongoing weakness, at least in the short term, of the Kiwi dollar against the dollar. And right now, for if you look at from this perspective, the Kiwi right now is the weakest among the major currency, and we did highlight that as well yesterday. Those who follow our datos yesterday, I did highlight one particular Kiwi related cross pair, which is the Kiwi yen. So it actually now moving within the expectation. So yesterday we do have a short-term intraday bearish bias, which I highlighted yesterday. Kiwi yen below 94.40 short-term pivotal support level. So no change. The next near-term support level to watch will be 89.40. Below it exposes 88.60 / 88.40. All right, so that's for the recap of yesterday's FX cross pair featured, which are featured on the Kiwi yen. Okay, so then on top of that, back to the news flow is the performance of the major US stock market. So we know that the major US stock market is now very yo-yo. So yesterday, prior to yesterday movement on Monday, there was a sell-off across the board, and on Tuesday Tuesday, which is yesterday, there was a rally across the board. So what I could see over here is that the most rally centered on the mega cap technology stocks that caused the Nasdaq 100 and the SPX to actually outperform by 1.55% on the Nasdaq 100, the SPX 0.96% or 97%, and the Dow Jones much more minute 0.3%, and the Russell 2000 almost unchanged at 0.09%. So if you look at the heat map of the S&P 500, we see across the board green in the mega cap technology stocks. All right, so I would say that where do we go from here? But not so convincing in yesterday's rally, because the Nasdaq 100 have failed to break above yesterday's short-term pivotal resistance, which we highlighted around at the 20,150 handle. So later I'll touch more on the short-term intraday technical outlook when we cover in that particular segment. Okay, so that's for today's the first segment of today's daily dose, where it pertaining more to the news flow, data release, and as well as their respective price action movement. I'll share with you. Right now, going forward over here is now let us now have a quick look take on the short-term intraday technical outlook. So today there'll be no interesting fundamental and intermarket dynamics that I would like to share with you guys. All right, so over here, let us start with the FX market first. Okay, before that, let me expand my screen so that you guys could see. Okay, so like I mentioned earlier on, the dollar strength has started to dissipate against the other major currency, except with the dollar, except against the Kiwi. So if you look at the chart of the euro dollar, okay, starting with euro dollar, so this euro dollar still no change. I still managed to hold at the 1.0945 short-term pivotal support, but it'll be very boring. It got to break above 110 level before we can see a much more forceful bullish bias on the intraday basis. So yes, we still keep our intraday bullish bias since it's managed to help above that 1.0945 level, but it got to clear above the 110 level to see a much more forceful bullish bias to expose the next near-term resistance level at 110.55 followed by 110.90 next, which correspond to the 50-day and the 20-day moving average respectively as well. That is, I think, conferencing as a resistance, these two resistance level. However, if price break down below 1.0945, then today's intraday bullish bias will be invalidated to see the extension of this minor corrective decline to expose the medium-term pivotal support at 1.0890, which confluence with the 200-day moving average. All right, now turning our attention will be the sterling dollar. So the sterling dollar also pretty much the same situation as the euro, managed to help at the 1.3070 short-term pivotal support level, but in order for it to increase or the odds of a much more forceful bullish bias, it got to clear above 131.30. Okay, 131.30. So above 131.30 exposes 131.60, then thereafter followed by 132.22 slash 132.50. But however, if price action starts to break down below 130.70, then it will inch down towards 130.40 before testing the 130 figure short-term pivotal support, before testing the 130 medium-term pivotal support level. Okay, so that's for the sterling dollar. Okay, so the euro and the sterling will be pretty much boring. Yes, both of them helped at their short-term pivotal support level, but at the upside, there is their respective upside trigger level they got to clear before increasing the odds of that intraday bullish bias. Okay, so that's for the euro, sterling, and that's for the euro dollar and the sterling dollar. Okay, now with that, let us now focus on the Aussie dollar. So on the Aussie dollar, what you could see over here is that it still managed to help at the 50-day moving average, which is our 67.20 short-term pivotal support level that we highlighted as well. But net overall, we still maintain that intraday bullish bias. First resistance level to watch for today will be 67.70. Let me put that in writing. All right, 0.6770. So 66.70. Above 66.70 exposes 68.10, which is the 20-day moving average that's acting as a resistance level as well. But however, if price action starts to break down with a hourly close, hourly close below 67.20, then that would invalidate today's intraday bullish bias to see the extension of this corrective decline scenario unfolding more towards the downside, with the next near-term support level coming in at 66.70 and even 66.35 next, which confluence with the 11 of which is defined by the 11th of September 2024 minus swing low area that confluence with the 200-day moving average. So that's for the Aussie dollar. Dollar yen. So dollar yen yesterday tumbled down and almost hit our first support level at 147.20. So yesterday it printed a low of 147.35 before stating the recovery and hit the intermediate resistance level at 148.35. That in the last 3 hours trading sideways below it. So still no change, still using 149.30, which is our medium term pivotal resistance level. Support level to watch again for today will be 147.20. So still maintain that intraday bearish bias at 147.20. Only hourly close below 147.20 will increase the magnitude of that bearish bias for today to expose the next near-term support zone at 145.90 slash 145.45, which confluence with the 50-day moving average, I think, as a support. But however, if price action starts to push up above 149.30, then this intraday bearish bias will be invalidated to see the extension of this mean reversion rebound that has been in place since 16th of September towards the major resistance zone of 150.20s followed by 150.90, which correspond to the 200-day moving average. All right, as well as this congestion area of 31st of July and 1st of August. Okay, so that's for the dollar yen. And right now, I would like to share with you all one particular FX cross pair to take a look at for today. will be this Euro Aussie. Okay, so for those who follow our day, those last week we also featured this FX cross pair Euro Aussie, but last week we have a bullish bias at around this 160.50 level, because there's some bearish element for a bullish element for a mean reversion rebound, and the mean reversion rebound has already made our resistance level at the 1.63 handle level. We also confluence with this 20-day moving average as well. And what we could see right now is that there is some potential signs of exhaustion by this mean reversion rebound that has taken shape 3 sessions ago. Why? Because what we could see over here is that now price action has started to shape a higher high over here. Okay, a higher high. But what we could see right now, as depicted by the same so-called period in time, the RSI has shaped a lower high. Okay, lower high. So what it means that this push up recently is now losing upside momentum or losing strength, and potentially there could be at least a intraday weakness being inflicted back on the Euro Aussie, as this ongoing medium term downtrend that is in place since 15th of August still remains intact. And what we could do over here for today is I'll be using this 163.70 as my short-term pivotal resistance level, very close to yesterday's intraday high of 163.53. So 163.70 short-term pivotal resistance flip to a intraday bearish bias on the Euro Aussie. Near-term support level to watch on the intraday basis will be 161.80. A breakdown below it exposes 161 figure level. So that's for the Euro Aussie. But however, if price action starts to break up above 163.70, that means hourly close above it, then this intraday bearish bias will be invalidated to see the continuation of this mean reversion rebound to expose the next resistance level at 164.30, followed by 164.70, which is confluencing with the 200-day 50-day moving average, and as well as this medium-term descending trend line that I drew from the high of 15th of August. Okay, so this is one particular FX cross pair to watch for today, Euro Aussie. Okay, now with that, let us now focus now on the major stock indices, starting with the Hang Seng Index, the Hong Kong 33. So I could see now the Hong Kong 33 has really broke down below the short-term pivotal support level that I highlighted yesterday at 20,880 slash 20,590. So with that, it's now coming very close to the 20-day moving average. All right. So on the, because it's on the intraday basis, so right now, given that the current price action leaving from the 20-day moving average is just very closer, very close. So with that, in terms of the reward risk ratio perspective, right, I will not outright turn bearish bias right now because it's coming very close to this support level. So instead, I will flip to a neutrality stance for today. Okay, on the Hong Kong 33. Okay, let me do it over here. Okay, neutral between 19,790 and 19,445. Okay. Okay, so this is the lower limit. Okay, 19,000. Okay, 19,790 is this over here. This former minor swing high now turns into a pullback support from 17th of May previously, and also the close to the 20-day moving average that's acting as a support at 19,445. Because if you look at the intraday basis, right, the current price action towards this support zone here is just very little. Then the top side over here will be today's Asia session high, very close. Okay, at 21,550. Okay, that's today's Asia session high over here. Okay, 21,550. Okay, so neutral between 21,550 and 19,790 slash 19,445. All right, neutral between these two range over here. So unless we see the price action manage to stage a recovery above the 21,550, then potentially yesterday's pullback in terms of that downside momentum has been more or less negated, then we could at least potentially see a kind of a short-term recovery to expose the next near-term support, next near-term resistance level at 22,320 next in first step, then thereafter followed by 23,550 slash 23,670. All right. So this particular Hong Kong 33 I want to touch on is now very dependent on news flow. So it's going to be very volatile. It's all in the next 3 to 4 next week, this week or next week or so, market participants are now looking out very closely to any news coming out from any government, China government bodies like the Ministry of Finance or any top officials speaking that hint of more fresh new stimulus, not monetary stimulus, physical stimulus that will actually be ignited pretty soon. But so far, yesterday, the NDRC announcement was rather disappointing because there was no mention about additional stimulus or fiscal stimulus that the market is actually eyeing up for at least 2 trillion yuan. So nothing of that coming out. So the next few days or even stretching into next week, market will be very much dependent on such news flow, especially on the China market and the Hong Kong Hang Seng Index, which is the Hong Kong 33. All right. So with that, now let us turn our attention to the Japan 225 or the Nikkei 225. So the Nikkei 225 yesterday were neutral because of the very mixed element that we see. So based on yesterday price action, right, or the latest price action so far, since the high of 27th of September until the current price action, it seems to us that the Japan 225 or Nikkei 225 is now being trapped inside this minor symmetrical triangle range resistance over here. So with that, given the RSI now is also skewing towards more on the bearish side by depleting this lower high as well, and has yet to reach its oversold region. So potentially right now, the price action of the Japan 225 could actually revert back down towards the lower half, the lower limit of this symmetrical triangle range support level, or the lower limit of that symmetrical triangle range configuration. So with that, I'll be using the upper limit of this symmetrical triangle range, which is at 39,790 as my short-term pivotal resistance level, flip to an intraday bearish bias towards the next near-term support at 38,740, followed by 38,260, which is the symmetrical triangle range support level, and so confluencing with the 200-day moving average. Unless we see a clear hourly close with hourly close and a breakout above 39,790, then that would invalidate today's intraday bearish bias to see a bullish breakout of this symmetrical triangle range to seek out the next near-term resistance level at 40,155 slash 280. Above it sees 40,800 slash 990, which is a 0.7614 Fibo extension from the low of 7th of September, and also confluence with this former minor swing low area of 8th of July, 5th of June, broken down now turns into a pullback resistance level. Okay, so that's for the Japan 225. So now with that, let us now turn our extension towards the German 30. So no change on the German 30. The German 30 yesterday continues to struggle below the 19,220 short-term pivotal resistance that we highlighted. Still remains that intraday bearish bias since it can't clear above 19,220. First support level to watch remains unchanged at 18,960, only a breakdown below 18,960, which confluence with the rising 20-day moving average. Then potentially we may see much more, we call it weakness on the German 30 on the intraday basis to expose the next near-term support level at 18,690. However, a price breakout for hourly close above 19,220 will invalidate today's intraday bearish bias to seek out the next near-term resistance level or next near-term resistance zone, which is close to the all-time high area at 19,550. 19,460 slash 19,550. That's for the German 30. Turning our attention will be the US major stock indices, starting with the US Wall Street 30. So no change on the US Wall Street 30, pretty boring as it continues to trap within this neutrality limit or zone that we highlighted yesterday, 42,440, 41,950 level. So still remains neutral between these two levels, 42,440 and 41,950 on the Dow Jones Industrial Average and the US Wall Street 30 on the intraday basis for today. Okay, flipping our attention will be the Nasdaq 100. So yes, the Nasdaq 100 managed to actually hit Reddit yesterday, but there was a there was a minor bearish reaction of the 20,155 short-term pivotal resistance that we highlighted. Okay, so still no change, still maintain that intraday bearish bias on the Nasdaq 100. And so given that the fact that the RSI also has managed to hit the overbought level and now kind of exit off from the overbought level. So it seems to us that it may be trapped within this range bound situation again. So still maintain that intraday bearish bias, 20,155. Short-term pivotal resistance, kind of a range bound. Lower limit of this range will be at 19,750 slash 19,630. That price action managed to help since last week, 2nd of October. All right, so it seems to me that it's a range configuration over here. So now, since we're at the top of the range, there could be a possibility to revert back to the range, minor range support level. Also confluence with the rising 20-day moving average as well. So it's a 19,750 slash 19,630. But if price action goes down as intended and starts to break out above the 20,155 level, then we got to respect this price action to seek out a new impulsive up move sequence, at least on the intraday basis. Next resistance level to watch, 20,360 followed by 20,615. So 20,615 is the minor swing high of 15th of July. So that's for the Nasdaq 100. So turning our attention now is the one of the commodities market will be gold XAU slash USD. So for gold XAU slash USD, it broke down below the 20-day moving average and also the short-term pivotal support that we have yesterday at 2,625. So what we could see over here is that yesterday breakdown has now shifted on the intraday basis towards more on the bearish bias rather than the bullish bias. So right now, we potentially kickstart a minor corrective decline scenario, given that it also broke down below this minor ascending channel from the low of 9th of September. So using yesterday's US session high at 2,650, which is also this congestion area over here that failed to actually break out on Monday, as long as any potential bounce didn't surpass this 2,650, but I don't put it so tight at 2,625 just in case of any whipsaw, even though now during Asia session there's a minor bearish reaction of it. So using a slightly higher level at this 2,650 level, this will be my short-term pivotal resistance for today. Flip to a intraday bearish bias for gold XAU slash USD for this minor corrective decline sequence to play out. Next near-term support level to watch, 2,590 followed by 2,570 next. Okay, these are the two support level to watch on intraday basis. Only a hourly close back above this 2,650, then we talk about this potential reassertion of the impulsive upmove sequence level to revisit 2,674, and thereafter potentially even the current all-time high level at this level over here, 2,684. Okay, 2,684 next. Okay, so that's for gold XAU slash USD. Now, lastly will be West Texas crude oil. So West Texas crude oil, yesterday we do have a bearish bias because of the bearish divergence that was being flagged out. So we flipped to a bearish bias for this minor corrective decline, and the minor corrective decline indeed hit the key support level, former range resistance from 24th of September to 2nd of October before that bullish breakout now turns into a key pullback support level that also correspond to the 50-day moving average as well. And what we could see over here is that after hitting the oversold level, the RSI managed to now stage a bounce. So with that, we will use 73.15 level since it already hit the support level yesterday, flip back to a intraday bullish bias on West Texas crude oil. Near-term resistance to watch on the intraday basis for this potential bullish bias to play out, 75.70, a breakout above it, potentially revisit Monday's or Tuesday Asia session minor swing high at 78.30, which correspond to the 200-day moving average as well. I think closely at the resistance level. Only an hourly close breakdown below 73.15 would jeopardize today's intraday bullish bias to see the extension of this minor corrective decline to expose the next near-term support level, 71.47, which is the 20-day moving average acting as a support. Breakdown below it sees 71.10 next. All right, so that sum up today's intraday technical outlook on West Texas Oil and as well as the major cross asset classes, which I'll include a particular Euro Aussie FX cross pair as well. Then going forward, taking a look at the calendar, what are the key calendar to look out for? So today, key event I want to highlight over here, right, is the Fed minutes, the FOMC minutes that will be released in the early Asia session today. But before we go on to FOMC minutes, let's have a quick look today. What are the data to look out for during the European session over here? Okay, so during the European session, okay, where is it? Yeah, so here. So during European session, not much data to look at out for except for Germany balance of trade. That is out at 2 p.m. Singapore time, and we have a ECB official speaking at 4:30 p.m. Singapore time. ECB Edison. Then after that, we have a same again today. We have a slew of Federal Reserve officials speaking. I don't believe could be any change in their tonality. Should be the same as yesterday. 9:15 p.m. Fed Logan, and 10:30 p.m. Fed Benke and Fed Goolsbee, and that usual weekly US EIA crude oil weekly stockpile change for the week ending 4th of October at 10:30 p.m. That could actually impact the intraday movement on the West Texas crude oil. Then thereafter, we have Fed Logan and Fed Williams speaking at 10:45 p.m. at 11 p.m. Singapore time. And this is the all-important key event for today will be 2 a.m. the release of the FOMC minutes. Because in this FOMC minutes over here, there's actually one official that dissent against that 50 basis point cut last month. So in this Fed minute, we are able to actually decipher their discussion going among the Federal Reserve official, what are the things that they're actually looking at, and also why the mindset of some of the Federal Reserve officials that support the mega 50 basis point cut, and as well as the particular official that only dissent against that 50 basis point cut. That could actually frame up going forward how will be the interest rate cut cycle will be like going forward in the next couple of months. Then after that, at 5 a.m., 6 a.m., another two Federal Reserve officials speaking, Collins and Daly. All right, so during tomorrow Asia session, there will be no key data to take note of as take note of. So that will actually sum up today's daily dose of market insights. I'm Kelvin here, signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.